Thank you for joining us for this live stream discussion on starting a business or developing your own business. If at any time during this discussion you have any questions for any member of the panel, please feel free to type it into the chat section or comment section, and then the panel will get these questions at the end and we'll try to answer them for you. You'll also have this opportunity at the end of the discussion to go to the comment section, and the panel will be available during that period as well. Welcome, my name is Mike Cherewka. I'm from the law offices of Mike Cherewka, and today we're going to bring you a panel discussion on starting a new business. There has been an increasing amount of inquiries in our office about starting a new business, how to do it, why you should do it, what are the legal consequences, tax consequences, and other factors that people should look for when they're thinking about starting a business. And we felt the most appropriate way to bring this to you would be in a panel discussion where you'll get different perspectives based on different professions. The groups that we have with us today include a certified financial planner, we have a CPA, and we have the head of our local Chamber of Commerce, who will all give you a different perspective on what you should look for if you're going to get into this type of discussion. So to my left, I have Tony Conte. Tony, if you want to go ahead and give a brief description of where you're at.
I'm Tony Conte, managing partner at Conte Wealth Advisors. I am one of a team of independent financial planners and wealth managers that work to build financial plans for our clients and wealth management strategies to carry them through their lives.
And Steve?
I'm Steve Lubart, CPA and member in charge of our Camp Hill, Pennsylvania office for SEK CPAs and advisors. The primary work that I do is working with closely held businesses and individuals doing tax and consulting work.
And George?
Hi, George Book. I'm the president and CEO for the West Shore Chamber of Commerce. Chamber of Commerce is here in Camp Hill. We're in charge of trying to bring together our businesses, our communities, our educational institutions, and our government officials for the betterment of all those involved.
Okay, so usually when we get involved with starting a new business, one of the first questions we ask is, why are you starting a business? You may have the next great hot idea, or there may be some other factor such as you were just laid off and you're looking to start a business rather than look for a new job. And George, we felt that you might have the best perspective on where do some of these ideas come from, since
Sure.
they may come to you first.
Sure. So we get to talk with a lot of individuals who are looking to start a business, thinking about starting a business, and in many cases they have a great idea about something. They have a great idea of something they can do or build. The problem is running a business takes a lot of things, right? And there are a lot of things that go into running and starting a business. So we are more of a business resource center. So we help connect the CPAs, the law firms, the investment companies, the attorneys, everybody that would be needed for an individual to start a business. We provide referrals and direct phone calls to those businesses so that they're able to get the resources that they need. So whether it's financing, whether it's legal help, whatever that may be, we tend to be the operator that's connecting those phone lines to be able to connect everyone to make sure that they have the resources they need to make the best informed decision that they can as they're getting ready to start a business.
All right, so one of the first things that George emphasized there was this definitely requires a team approach. You're going to have legal factors, tax factors, accounting factors, financing, benefits that you might have to offer to employees. So we encourage you right from the beginning to look for a team, to put together a team, as George said. One of the first issues that usually comes up is once you've decided that you want to go forward is, how are you going to form this entity? What is your business going to look like? The simplest form is often a sole proprietorship, but if you're doing anything that has any potential liability or requires employees, typically you're not going to adopt that form of business. So usually we're looking at different forms, partnerships, limited liability companies, and S corporations or C corporations. If that makes sense to you, you're further along than most people. If it doesn't, this is a reason to put together a team and why you would start that discussion. So often, whether you're going to have a limited liability company or a corporation form of a business, the idea here is you're doing something that might generate liability. It might be something dangerous, such as manufacturing, chemical production, or use of chemicals in a process. You might be selling consumer goods. So you're looking for some reason to shield yourself or your personal assets from that. Once you start having these discussions, it's really important to bring in the other advisors then, because this affects tax issues, this affects financing, and it also affects the type of benefit structure or retirement plans that you might be able to set up. So usually the first question that we get is, what's the reasons to do this for taxes? Or how do I save taxes? So Steve, if you want to take a look at that.
So the common thing that we look at is, it's, when they first form is, what type of entity are they going to be? And as Mike said, that it is common they may start as a sole proprietorship, and we look at that as really if it's going to be, they don't have a lot of risk liability, and they're looking to keep things simple. We call it Schedule C or sole proprietor, and that's where everything is just reported on your own personal tax return. But as you start to grow, you need to look towards other entities, because the sole proprietorship, what people get surprised with is the self-employment tax or the FICA tax, and that can really creep up on people and they end up with a higher tax bill to the government than what they're expecting. So as they start to grow, we look at maybe if they had formed an LLC for liability protection, that we look at doing an election to have that LLC taxed as an S corporation, and then we typically can have them take reasonable compensation and then take the rest out in dividends. And what's taken out in dividends allows them to actually have a portion of that income not taxed for Social Security purposes, which is 15.3% Social Security tax. So there's quite a bit of savings there. So we kind of go through and manage, because when they form an S corporation or they're taxed as an S corp, then they have another requirement of filing an S corp return. And then they also have payroll tax returns that they need to file as well. So you kind of have to look at the cost benefit. We want to look at that they're not running into necessarily a lot of accounting fees that may outweigh what the savings might be in taxes. So as they grow, we might be looking at profits of 30, 40,000 or more that they need to start looking at converting to an S corporation. And then there's other types of entities as well. They may choose to have their LLC taxed as a C corporation. I'm not sure if you run into that, Mike, where maybe for foreign, they have foreign investors as well.
Correct. That's what often happens if you look at a foreign corporation or doing business in foreign lands. Many of them don't recognize limited liability companies, and some of them have very different tax structures where if you go in as a partnership, so often they'll form a C corporation, which is taxed at the corporate level and has different tax consequences, as Steve has described, but you may be required to do that to avoid the consequences overseas or in another jurisdiction. The other reason for forming a C Corp is if you're developing this company with the idea that you're going to sell it or you're going to go public. If you have the big dream, very often they have to be C corporations. That's how they move on to the next level when they structure themselves to get other types of financing.
We usually kind of stay clear to C Corp unless some of those things come up, because from taxing wise, there is a double taxation there.
Correct.
The current tax law, the C Corp tax is 21%, so there is some advantages there with that there wasn't before. But the money is taxed that's left in the corporation, and then what hadn't been paid out in wages, when they try to pull it out in dividends, there's also another tax. So that's why we usually stay clear of the C corporation, but there is reasons that you'd want to do it, like Mike had mentioned.
Right. So if you're in a startup mode, most of the time you're not going to see a C corporation as an option. I would agree with Steve there. We very rarely do that, but in limited circumstances you may run into using that factor when you're making a choice as to how you're going to be taxed. Steve brought up payroll taxes. He brought up, which generally then means you're going to have employees. And as you get into the concept of hiring, firing, you also need to look at what do you need to attract employees and to keep them. And in that kind of case, we're usually referring to a financial planner then to come in and provide that perspective.
Sure. Yeah, I'll tell you, it's far too often that I get a call from entrepreneurs who had started their businesses. They're maybe within the first year of running that business, and they tell me at the beginning of the next year that they started the business and their CPA wants them to sock some money away and do retirement plans. That's not the way to go about it. Yes, we rely on the CPAs to help us understand how much should go into a specific type of plan, or to help us understand what sort of plan might work best for a client's situation. But there are deadlines for starting different types of retirement plans. So I think the first thing I like to have entrepreneurs think about when they're considering putting in place a plan for their company and for their employees is, what is the purpose of this plan? What's your intention? What's your goal with the plan? Do you intend to compensate yourself as what we would qualify a highly compensated employee for purposes of 401k plans, plus employees? I mean, is this a true employee retention scheme where you want to provide benefits to the employees because you want them to value the work that they're doing with you and know that they are valued? I think in addition to that, certainly one of the considerations is, what is the cost of putting a plan in place? There are plans as easy to start up as what are called simple IRA plans. They truly are very cost effective to set up. They have different requirements for how you either match or just give money to participants in the plan. Those plans are entirely pre-tax. So everything you save into a plan like that, just like a traditional IRA, would represent pre-tax savings. You're not going to be taxed at the federal level when the money goes in. It grows then tax deferred, and when you take money out in retirement, you have to pay income taxes on that. Now you contrast something like a simple IRA with, we'll just say, a 401k plan. A 401k plan is going to be a bit more expensive to implement, right? So for some entrepreneurs that maybe don't have a whole lot of employees, they may think, well, this may not be the kind of plan to put in place just yet. I may want to wait a few years until I have the employee base to make the hard dollar costs a worthwhile pursuit. I would encourage solo practitioners, like individual, sole proprietors. I would encourage sole proprietors to consider looking at the solo 401k plan as well. Not a lot of folks are aware of these types of plans, and one of the great benefits of 401k plans is you've got the opportunity to save not only in a pre-tax way, but also in a post-tax way. So I know when we had some previous conversations, we talked about the prospect of maybe some tax increases over this coming year or possibly next year. If that's to occur, and if we expect that, moving forward, I may be in retirement with a higher income tax bracket than I am today, a lot of those Roth 401k type plans, even a solo Roth 401k plan, can be a great option for folks who want to pay their taxes at today's rates under the expectation that rates will continue to increase for them until they get into retirement, at which point the money they can take out is entirely income tax free if they take the money out in the right way. So I mean, there are a lot of different types of plans and a lot of ways to, I think, build the plan specifically to suit your needs and to suit the employees' needs, but you have to start the conversation at the right time. And I would contend that, sure, you have a lot of things to worry about when you're starting a business. I'm not going to be top of mind at the outset of something like that, but I would encourage you to at least open up the lines of communication with your CPA, with your advisor, to begin to understand what your expectations for income are going to be over the coming year and what that might mean for your employees and for your ability to save in various types of plans.
So this conversation should really, the first thing that should come up to your mind is, boy, this requires a lot of planning. And it really does, and it requires a team planning approach. George mentioned that the Chamber is a great resource, which it is. And one of the first things that you're probably going to be looking at is the development of a business plan. You could have these discussions with different advisors. You might even be lucky enough to have us all in the room at the same time. But the development of a business plan is going to be critical from a number of different perspectives, particularly if you're going out and seeking financing. So George, if you could.
Yeah, I think the biggest issue that we have found with individuals attempting to start a business is they have a great idea, but coming up with that business plan typically can be a very big hurdle for them because they're just not sure, number one, what that may look like, or what is involved in coming up with a business plan. So there are plenty of resources out there. SCORE, which is a mentorship program, provides opportunities to get together with business leaders to be able to say, hey, what does this look like? Get some free advice on how to go through that. The SBDC offers some great opportunities for individuals to be able to sit down, again, get free advice on what does that look like. And I think coming up with that business plan, again, helps provide some of that framework for what they're looking at. Too many times entrepreneurs will look at this great idea, this great thing that they're coming up with, and although it's great and wonderful, it's the now I'm doing everything for myself. So I'm not just the owner, but I'm in charge of marketing, I'm in charge of HR, I'm in charge of payroll, I'm in charge of supplies, and the list goes on and on and on. Whereas before, when you work for someone else is doing that, right? So now all that focus gets shifted onto that individual or a couple individuals that are trying to come up with that. And so having a plan of action for what you're going to do and how you're going to do that is very important. And Tony makes a very good point. You don't think about these other things that you would just get if you're in a job, but if you're doing it on your own, you have to start thinking about it and thinking about it early, because you get 1, 2, 3 years in, think of all the money that you've missed out on, an opportunity to be able to capture, especially if you're starting entrepreneurship later in life, right? Those who start younger will tend to be able to retire because they've been saving that exponential savings. So I think from that aspect, especially if you're looking at this as second job, second career, you need to really consider what are those implications, because it could set you up for very good success, or maybe not as much success as you're looking to retire and move on down the road. So.
Yeah.
So the business plan is going to force you to think about all these different factors in your business, or all these different parts of your business that you may not have had to think about before. You have this great idea, or you are forced into forming a business in order to pick up what you were doing before for somebody else. So we're talking about different types of entities, or different types of structures, different tax implications. The business plan will force you to go through those. Business area by business area. You have a great idea, but the world doesn't know about it. So one of the aspects that the plan's going to make you think about is, how do you market it? How do you let the rest of the world know about that? We're a law firm, Steve's a CPA, Tony's a CFP. We can help you, give you some experience based on what we've done before, but often, again, you may turn to the chamber as a resource saying, how do I let the world know about this? And they have plenty of marketing resources to do that.
Yeah, the good thing is about us as a Chamber of Commerce, we don't as an organization have the answers, but we have contact with members who do. So whether it's marketing, whether it's promotion, whether it's PR, financial planning, CPA, attorneys, the list goes on and on, financial institutions. The Chamber can be your resource to really find these and find them locally in your hometown where you're looking to try and get this idea to take off. And I think that's important for people to understand, that there are big business out there are big banks out there are big law firms, but if you go to your small town neighbors, they're the ones that are in your community, and they're the ones that really want to support you and be able to support the community where they live, work, play, grow, worship, all of those kinds of things. And so I think that's very important for businesses to realize that there is a network out there. You just have to go and engage and be part of that.
And I think that's a really good point. It's important for folks, at least from my perspective, for folks to understand when they're starting a business that, yes, you have to do the research, you have to have an understanding of kind of what it is you're in for in kind of each of our respective fields. But I would caution anyone against trying to do this yourself. I ended up getting on a call with a business owner. They'd owned this business for about 4 years, and they were ready to start up a plan, like a nine individual operation. And I get into about a half hour of the conversation, and I find that the business owner has done a lot of research on 401k plans, but it had led him to a place where he didn't know the minutia of how the plans worked, and he was thinking about it in a way that wouldn't have been profitable or helpful for he or his company. And it's like, I go back and I helped him out, and we continue those conversations, but I go back and think, how many hours did you spend reading on these various websites about all of these different pieces, only to find that it kind of took you down the wrong rabbit hole? If you get just a base understanding of what you can expect in each of these fields, then I think you reach out to each of us in our respective fields and ask for that help and support. One of the key questions I think entrepreneurs need to ask their professionals is, will you willingly communicate and proactively communicate openly with the other I would say professionals in my life? Some of the most I would say some of the most egregious errors we've been able to avoid for our clients by simply picking up the phone and calling the CPA or calling the attorney and saying, hey, what do you think about this? And make sure we're all on the same page. And I marvel that too infrequently happens.
Tony, it's interesting you say that about kind of getting those strategic partners, because we find that there's certain errors that businesses make that can really cause problems for them. And you find that they're trying to do too much themselves instead of doing what they're good at, and they try to do things that they should maybe not be doing if they don't have an expertise. A common thing with that might be payroll, for example, that they maybe should contract out their payroll. I know they may want to save some dollars, but maybe they should contract out a payroll service to do that, to get it set up right, to avoid those penalties that can far outweigh what the savings might have been. The other thing, kind of starting off going with like the business plan that George was talking about, is getting their accounting system set up right as they start, so they can manage their business properly, not just be stuffing things in a shoebox or populating an Excel spreadsheet or putting things in a folder and then just handing it off. But they need real data as they're working. A common thing that we work with is QuickBooks Online, and maybe that's something that they get set up with, and they can share that with their other partner that they're working with, or share that with their CPA or accountant. And I think that just helps them to stay ahead of things and to manage their business properly. But you find that people try to do too much themselves, and it ends up getting them in trouble.
I think it's a point well made, right? Your time is valuable. Everyone's time is valuable. And if I spent my time trying to figure out how to work in all of these various industries, it wouldn't be a worthwhile pursuit. There's infrastructure in each of our respective, businesses to support what it is we do, and I respect the DIY effort. I really do. I think there's value in having an understanding of all of this. But once you start to step into trying to be the CPA, or like I've had clients bring to me these incredible spreadsheets that carry you through what their financial plan would look like. And it's like, wow, you could have saved yourself like a ton of hours by using literally any one of these other tools to get it done that wouldn't come at considerable cost. You just didn't know about them. So you went into it with the right expectation, or the right hopes, and in the end, you spent a lot of time when doing something else when you should have been maybe growing your business.
They probably learned a lot through the process, but they did not capitalize on what they were best at.
Sure.
Yeah, I think one perspective we could all bring to the table is we're really good at what we do. We're probably not really good at what the rest of the world does. And the concept of having a team there is we're not necessarily a cost. We bring the value that the team brings to the table. Their perspective in their own profession, but also their perspective as business owners. Most of the time your team is going to consist of other small to mid-sized business owners that have done what you've done. You can learn from your team's mistakes, you can learn from their wins, and when they're talking to each other and you authorize them to talk to each other, you get a great dynamic or a great synergy usually out of those kind of meetings or those conversations that can really help you save time and, as Steve said, avoid some serious issues that you might run into if you try to do it all on your own. So you've gone through this planning process. We've talked about marketing it, letting the world know what you want to do. Now you're starting to grow. And one of the issues that happens when you start your own business is, where do you get your capital from? A lot of people will come in and they've just retired or they've just been let go, and they may tap their retirement plan to start their business, or the equity in their house, or we call it friends and neighbors and family members. But at some point you really need to look at that and say, where should I capitalize this business? And you may want to look at that from the beginning rather than trying to find out where you can grab money from a couple thousand here or 10,000 there. And just as part of your overall business plan, look at where is the available resource of capitalization. And again, the chamber is usually a great place to start. They can direct you to different resources.
Yeah, I think for us as an organization, we don't have the tools, as I've said, necessarily in our back pocket, but we do have the opportunity, and I call it a red phone, to be able to make that direct phone call to who do you need to speak with, right? Is it your local county economic development agency? Is it a local financial institution? Who is that that's going to be there? And in most cases, those individuals and those groups, they want you to succeed, right? They're not looking to just say, oh, well, we'll just give you some money and hope you pay it back so we can make some cash. They want you to succeed. They want you to be able to move your business forward, do well, and come back to them and say, hey, I'm ready to expand now. I'm ready to hire more people. I need a bigger space, whatever that is. And so those individuals who are looking to help you, again, they want to help you. You have to let them know, as Tony said, you have to have that conversation. You have to talk to them and say, here's everything, right? I'm laying it all out on the table. What do you think? Where do you think is the best way to go? And then they're going to be able to provide you with that feedback and say, here are some opportunities, some options that you may have. It may not just be go get a loan from a bank and you're done, right? There may be some other things, some other funding sources, whether that's state, federal, local government. There could be opportunities there for you to be able to get some money. You put some money in, they put some money in, be able to move that forward. And again, you're talking about keeping yourself at risk, keep those liabilities down. It's a great way to be able to do that.
You know, I just want to put in a plug for the chambers of commerce in the various regions, and the West Shore Chamber of Commerce specifically. I was a W-2 employee for a bunch of years before I became self-employed, moved back to this area, and one of the first things I would encourage any entrepreneur to do, regardless of your region, is to join the Chamber of Commerce in your region. I just think it opens up so many doors to exactly these types of conversations, helps to connect you with the professionals you're looking to connect with to help you build your business and put you in touch with other entrepreneurs who are in the same place as you so that you can learn and grow together. It's just been truly a phenomenal resource for me over the years.
And the idea of having the resources is the great idea. Make them part of your team. As you look into those different types of capital, different types of financing sources, you want to bring the team back into that conversation. George mentioned the risk. Well, a lot of things entrepreneurs don't think about is you are the source of financing. So if you're going to get a loan, if you're going, other than a grant, you're going to have to make some decisions. What does the entity look like that's borrowing the money? What is your collateral? Do you have real estate to back that up? Do you have equipment? Do you have inventory? And a lot of information usually has to be brought to the table to help you convince the financing source that it doesn't have to be your house that's on the line, for example. You may want to have your financing set up, and you're going to need the right types of reports. So you may rely very heavily on your accountant in this phase just to help you convince the bank or the other financing source that there's enough equity there or there's enough activity there that you can reduce your risk.
Yeah, I think, one of the things that we see pitfalls is you mentioned about, tap into retirement. And a lot of times we'll get a call, which we get scared after the fact. It says, hey, I'd like to engage you as our CPA. I took money out of retirement to start this new business. 35 years old, great opportunity. And then whatever it may be, a couple $100,000. And they find that they pushed themselves into a higher tax bracket. They have a 10% early withdrawal penalty. It's subject to tax for state. There's just things that you want to talk with someone before you do that. Not that it could be a good option to do, but usually it's not. So you want to look at other ways. But you also want to be careful about certain things that you're getting into as far as higher interest rate things as well. So you want to be careful on that side, or we see people playing, the credit card game where they're just tapping into a credit card and then getting those deals of moving it back and forth. So I think you have to watch. We see all avenues of the way people, prospects, clients get money. So I think you just want to be aware of that. Talk to someone, analyze all of the options there, because you're ultimately trying to set yourself up for something long term. And there's some really good rates out there right now as well. So I think that if you can take advantage of that and not do something that causes a major tax implication, I think that's something to watch out for.
So I think the common theme you're hearing here is have that discussion before you make some of these critical decisions. Bring a team perspective to it so that you get a feel for not only is it a good idea or not, but is this the best way to do it? You're going to have a lot of struggles when you first open a business. It's a lot different than working for somebody for 9 to 5. but you're going to have a lot of great wins. It gives you a different perspective on life if you start your own business and it's become successful. But rely on others who have been there, rely on others that can give you a different perspective. And the sooner you do that, I think you'll find the value of those types of relationships as opposed to trying to do it on your own and then hoping that we could get you out of trouble if you've done something that you shouldn't have done or you could have done better before that. Does anybody else have any pearls of wisdom?
I think, you know, of course, we all love working with new businesses, but I think when you are deciding to do it, I think it's worth sitting down with someone and analyzing, is it better for me to be an employee or is it better for me to own my own business? And I think they need to look at the risk rewards, and they need to look at the tax implications and the legal side and their network that's out there. I think we've seen so much success in small businesses growing to large, and we see it on like a lot of the consulting side as well. We do a lot with the service businesses where people will break out from someone and decide to do it on their own, and that works out well. But I think you need to kind of analyze that and look at how that works out from the calculation standpoint. You know, maybe the benefits that you're getting, as Tony mentioned, on the retirement side, or maybe the health insurance. You need to bring all those into the equation on that, determine if it's the right fit for you.
I'll tell you, I've run those scenarios for folks before about does it make sense for me to stay where I'm at, or given the cost as a W-2 employee, or given the cost and the challenges that come along with setting up my own business and my projections for what I think that business might do, should I go that route? And when you hold these two ideas up against each other, it's pretty common for folks to be surprised about the difference, either one way or the other. I 100% agree, but I think that conversation happens, again, amongst the attorneys, the CPAs, and the financial advisors, because just one component of that conversation isn't going to be rounded out without the support of the two other industries.
And you might be looking at, you may be at the same spot of being an employee versus owning your own business. You may be making the same amount of money, but when your own business, you may be building something up to sell as well, which of course you don't have anything to sell when you're an employee.
Exactly.
So I think that's something to work out. A lot of people's retirement is their business. You see that mistake made with a lot, and I'm sure you see that as well, Tony, where someone says, hey, I want to start a retirement plan. I'm 50 years old, and everything's been wrapped up in their business.
We spend a lot of time encouraging business owners to meaningfully consider what the value of their business will be when they sell it. It's pretty frequent that at the outset of someone considering, and I'm sure you've both seen this too, at the outset of someone considering whether or not it makes sense for them to sell their business a few years from now, that we have to run a number of analyses and maybe help them better understand what it's actually worth. I think bringing realistic expectations to the table when you're building a business can only really be done with the support of professionals who've been through this before, if you've not.
Well, that perspective is really interesting because we unsettle a lot of clients that come into us when they start a new business, because one of our first questions is, how are you going to get out?
Yep.
What is your plan to exit? Are you planning to, if you will, retire by falling asleep in the chair? And that is a plan, by the way. I mean, there are clients that will come in and they plan to work until they can no longer work. If that is your plan, you could put into place processes and plan to do that. We have serial entrepreneurs, as we call them. They come in, they have a very specific plan, and they plan on being out in 5 to 7 years. And they will run their business that way. They will have targets for every year as to what they want to hit. They will know who their customers are, how they're going to grow it. It may be organically, it may be by buying other businesses. But in 7 years, they're done. They plan to move on to something else. That's exciting, it's intense, but that definitely requires a team if you're going to get into that type of approach, because everybody needs to be going in the same direction. And you may set your entity up differently in the beginning if that's your plan than if you plan to hang on to it for a long time. If, like most businesses, you plan to grow and you haven't really thought this through, again, I think this is where it's important to have your team talking to you. It's like, okay, here's where you're at, you're 45 years old or whatever, and what's it going to look like in 20 years? And I think it's important for your team to raise those conversations with you. We've talked a lot about structure, we've talked a lot about financing, what your other opportunities are, but do you have the personality to step into this world, if you will? Are you a short-term person? Are you a long-term person? Are you a planner? Or are you a ready, fire, aim person? And depending on that personality, you may have, the team may bring perspective to you as to whether or not this is really what you want to do. So you have startup, and we're talking to you about exiting at the same time, but it's important to have that long-term perspective as you get into a small business, in particular, a startup.
I think that's you touched on a point that I think is really interesting. We have a tendency, at least in our world, to look at the quantifiable, benefits of doing something. There's also, the other side of becoming self-employed or starting your own business that you really can't quantify, which is the joy of the freedom of being able to do what you'd like, grow your business the way you'd like, and leave it however you'd like. That kind of freedom has to be a part, I think, of the equation when folks are considering whether or not they want to become an entrepreneur. And you've probably seen the same thing that I have, which is, those folks that are truly entrepreneurs, they tell us when they're ready to retire, okay, we're done. I'm going to sell this thing. This is what I do, and then I move off and, I don't know, travel, or they've got a million plans for what they're going to do. About 3 to 6 months after they've fully retired, we find out that they've started another business that a few years later becomes very successful, and this would be the serial entrepreneur, I think. And that's that freedom and flexibility that a lot of folks don't have when they're a W-2 employee, but they would have, if they're self-employed.
And we see the other end of the equation a lot. Many times somebody will be running a business for a long time. We'll start this conversation either because the bank may have called them and said, we're not going to refinance that loan. You're 72 years old. Or the spouse may have said they want to do something. And we ask that question, what's next? Yeah. And if you're a legacy type business owner, you've started it, this has been your creation, a lot of times you haven't thought about that. And hopefully perspective that the team brings to you is as your business develops, we are having that conversation with you. The what is next question. Because a lot of times people, as Tony said, they sell the business and you can only golf so many days a week, or you can only go on so many trips, and then all of a sudden there's this void because you're used to running 100 miles an hour and working 70 hours a week, and now you don't really have a place to go. So that's a process. As you develop a business, you need to be prepared for that.
I think with the business as well, you need to be able to step away from it. To build value in the business, you need to be able that it can run on its own without you for a few weeks or whatever it may be. And those serial entrepreneurs, if they're running multiple businesses, obviously they're not in each business every day, 24/7. So I think you're going to build value in your business by it being able to operate on its own, and it's going to allow you a little bit of better exit strategy as well.
Yeah, a very wise person told me one time, talking about succession plans and exit strategies, as you get ready for that, part of this training wheels, if you will, or the baby steps that you take are, can you go away for a month on vacation and come home to something other than a parking lot? So will your business run without you? Are they going to be, are they dependent on you? Are they calling you every day when you're over in Europe and you're getting 4 phone calls a day at the hotel? You really need to be prepared to step aside and let the business run without you. And that's particularly important if your exit strategy is to sell, because the buyer is not going to buy you, they're going to buy your business. And the critical component is, do you have a business structure in place where they could do that? So we've talked a lot about developing the business, we've talked a lot about getting out of the business, but these are definitely issues that you need to consider as you start a business. And if nobody has anything to add at this point, we promised you that this would be an open forum, so please feel free to call in, send us an email, and if you have, as you have any questions, then the panel will be available to discuss those with you. Thank you.
Okay, this is Mike Cherewka. Steve, Tony are with me. George was not able to join us today for the Q&A. But the first question which we have received is, I'm looking to determine whether I need employees or independent contractors to operate my business. Steve, there's a lot of tax issues involved with that, so I'll throw that in your direction first.
All right, thanks, Mike. Yeah, this is a common question that we get, and it has tax implications as well. We see that a lot of times employers might want to bring someone on as an independent contractor because it minimizes the taxes to the company. And the big thing is the Social Security and Medicare taxes for that. But they need to be careful as well, because whether these people that they're bringing on to provide services, whether they are in fact taking instruction from the company, or is the company providing them the tools? Are they telling them what hours they need to work? Is the company providing them insurance, like the liability insurance? So I think when it falls into that, they would be considered employees and they need to bring them on payroll. Sometimes people don't want to have employees as well, just because they don't want to deal with actually administering payroll. So we do get that. But if you have someone who's truly an independent contractor, they're in business on their own, they have their own business cards, they have their own insurance, and they have their own tools, then I think that you can make the argument. This is a gray area. I'd refer them to the IRS website or their CPA to help determine whether it is an independent contractor or an employee, but that is a little bit of a gray area, and I would seek guidance as you're trying to determine that, because the government can go back on you, if you have them misclassified. And we also see Pennsylvania unemployment go back on that as well, trying to classify independent contractors as employees.
And I think it's probably also worth acknowledging that, once you've decided whether they're going to be employees or contractors, that has a considerable impact on the ways in which you manage any retirement plan for the company. There may be some greater flexibilities to be had in having contractors, at least for the business owner, right? Because a variety of retirement plans are going to require ERISA, that you adhere to ERISA guidelines, and those kind of guidelines with employees relative to subcontractors are going to be vastly different.
So I think you can see from the answers here from Tony and Steve, this is a really important area to have a team in place. Tax issues, I think, Steve, the last time I looked at it, the IRS was looking at 24 different factors.
Yeah, they tried to bring those down.
Yeah, an employee or an independent contractor. Tony brought in the perspective of it drastically changes what your benefit structure looks like, your ability to retain and keep good people. There are some statutory twists here. Realtors, financial planners, or insurance advisors, there's a tendency to allow them to be treated as 1099 employees, but it still allows the company to retain a little bit more control, if you will, over how they act and what they have to do. There's also biases in the state law. Truck drivers, for example, whether or not they're independent, delivery people, and often those statutes react to something that may have happened, such as when FedEx decided it didn't want employees anymore, and all of a sudden we had thousands of independent contractors driving FedEx trucks or trucking companies. So there is a lot of different perspectives that go into that. What's your exit strategy will be pulled back in. If you're planning to sell in 7 years and you have no employees, You just have independent contractors. A buyer may be less interested in you because you don't have a structure in place to ensure that they can continue the relationships with all those independent contractors. So it's an interesting area. And again, get the different perspectives before you make that decision, just to try to save a couple dollars up front on the payroll taxes, if you will. Okay, the second question which we saw was how can I minimize my risk as an employer once I do decide to set up a business? From a legal perspective, you really have to have controls in place. You may want an employee manual or some other form of written policies as to who your employees are, what their job descriptions are, processes that you have in the office. Really depends on the nature of your business. Don't have a lot of processes involved, for example, in an office like ours, because it's a small physical space, not a lot of danger involved, versus if you're in a manufacturing plant where you have moving equipment, where you have chemicals being used, where you have robots running around and along with people. That's a whole different perspective, and you have to have a lot more safety cautionary type protocols in place. Steve, Tony, you're...
Sure. Well, I mean, I could say just from a retirement plan perspective, the 401k space, 401k plan space, and other types of retirement plans are really fraught with risks for companies if you're not careful in how that plan is managed. So one of the most important aspects of implementing any kind of retirement plan in order to mitigate the risk is to ensure that you're not only providing a well-rounded, diversified lineup of funds and investment options for participants to invest in, you also have to make sure that you're documenting, or at least working with an advisor who understands what it means to document all of the participant education opportunities that are made available to them, ensuring that the plan is truly offered to the folks that the guidelines say it should be offered to. There is not a month that goes by that I don't read about another lawsuit, a pending lawsuit on a retirement plan offered by some big corporation. It's really easy to avoid quite a bit of this if you've got, I would say, the right kind of expertise helping you manage the plan, ensuring that the funds aren't too expensive relative to their peers, that the plan design is exactly what it needs to be to suit the employer and the employee and still meet the guidelines that the Labor Department sets forth. So certainly there are steps that can be taken, and they don't have to, when offering a plan to participants, you don't have to feel as if you're putting yourself out on the line for doing it. It just takes a little bit of preparation and, again, the right kind of expertise to support it.
I think on the accounting and tax side, the big thing for minimizing risk would just be accurate record keeping your receipts for your expenditures, having an accounting system, reconciling your bank account, and just staying on top of that, sharing information with your accountant on what you determine to be a regular basis. Make sure that you have the proper employees in place, internal controls to minimize risk on that side. Then it goes without saying, making sure that you're filing your taxes on time, your returns, payroll tax returns, business entity returns, and then paying those taxes that are due depending on how your entity is set up.
Yeah, we see a lot of issues with especially small startups where the employer will take the position that the employer, the withholding that they make from the paychecks are used as cash flow.
Yeah.
Steve, I don't know about you, but in my experience, you really don't want the IRS as a creditor with the payroll tax.
No, pick your battles. That's not one that you want to do. Yeah, you're a treasurer of that money. It's not to be used by you to pay expenditures. So what you're withholding from people's paychecks and any type of matches, you got to get that in on time and not get behind on it.
Okay. The next question, it reflects kind of where we're at today, especially after the pandemic. Do I have anything that I need to file with other states if I'm operating in different states? So with the increase in internet business and online businesses, the lines between states are definitely blurring as people get involved in more of those types of transactions. The first question really is, am I doing business in another state? So if you're sending employees into another state, if you're conducting construction activities or maintenance activities, if you have sales offices in other states, it's fairly clear that you are. From a legal perspective, there are registrations that are necessary there. You have to register at the state level as a foreign corporation or a foreign LLC or business doing business in that state. You have to file, usually with the Department of Revenue in that state, some kind of a notice. And in many cases, if you have an office, you need to look at the county level or the municipal level to see whether or not you need to register in that jurisdiction. Steve, just from experience, I know there's a lot of state tax filings when you're doing business.
Yeah, so you are. I think what you hear a lot is the 3-factor test. So if you have sales, payroll, and property in those states, then you very likely have nexus in that state and are going to need to file income tax returns in that state, both for the company, and then if it's a pass-through entity, you may very well have to file individually as well. And then if you have employees, you're going to need to file payroll tax returns in those states. So I think with what Mike said, make sure that you've had the registrations done, either with a CPA or an attorney. Make sure that you've done those registrations, and then proper record keeping of that property, payroll, and sales, so it's easier when it's time to file within those states.
Okay, Tony, you have operations in multiple states. You might be able to put a little flavor to this too.
Yeah, I mean, from the perspective of working with an advisor and working through your benefits, package with your employees, I think the only thing I can really think of would be, you got to make sure, and this is your advisor's responsibility, but your advisor has to be licensed in the states in which you have employees if you're providing, financial planning guidance or investment management support to those employees. I mean, I'm appointed in a lot of states right now, and I don't know beyond, you pay a few $100s to each state to get appointed there. I don't know that there are any real challenges, at least that I can immediately think of from that perspective.
And when you come to a specific type of business, one area where we're noticing a lot of issues is trucking or delivery services. And a lot of that is determined by what are you actually doing in the state. Pennsylvania in particular tends to be a connector state. So there's a lot of trucking companies, a lot of delivering services that go through our state. They may or may not stop here. They may not have deliveries here. But with all the warehousing and all the highway systems and going either northeast into New England or going south into the mid-Atlantic states, we get a lot of questions from either trucking companies or delivery services as to, do I have to file in PA? Why do I have to file in PA? Is usually the question after they get the inquiry from the Pennsylvania Department of Revenue. This is primarily a tax issue. So Steve, I'm sure this is something you probably see a lot, particularly here in the Harrisburg area. Yeah,
and we actually, within our firm, we've developed some specialist teams that just deal with the acronym SALT, state and local taxes. So we have a division that just is looking at that and really doing a study for companies just to see what their nexus is and what their risks are, what is requirements of their company to do as far as this. And also there's some good tax planning to do as well that may minimize your taxes and be some good business decisions too, as you're expanding or contracting, what you might need to do to minimize some taxes. So that's part of the study as well.
That seems to be the extent of our questions for today. I think any of us, if you have any follow-up questions or something that the team can answer in general, you can send us an email. Either go through our Facebook page or a direct email to any of us, or give us a phone call, and we'll be happy to follow up with you. Want to thank you all for attending, and good luck as you pursue your dreams with the new small business.